What is up, team? How's it going? I hope you guys are all having an amazing day. I know this is not the typical setup for our YouTube videos, especially our intros, but I have probably recorded this or attempted to record this video 5 or 6 times today, and it's just one of those days. So I'm gonna talk about emotion when it comes to trading, and one of the biggest things, all right, that you can do to remove that emotion out of the picture. We'll jump right into it. All right, I'm looking at ticker symbol SMH. Now this is a trade I actually entered yesterday over inside the mentorship group. This applies to all the trades that I enter, that I take, and trading as a whole. I'm interrupting this video briefly. I wanted to let you guys know that I actually closed ticker symbol SMH today, just an hour ago, for profit over inside the mentorship group. I'm gonna put a screenshot right here of the entry and the exit, and then a couple member profits. I actually made $12,000, $13,000 myself, screenshot right there, on this trade. And this video was recorded last week, so it's really cool to see that what I used as an example actually ended up performing and playing out just as I had predicted. With that said, let's continue on with the video. Always trade with money that you are comfortable losing. When you're entering a trade, pretend that money's already gone. I know that's very easy to say, but hard to kind of understand. This is going to help you. So if we're looking at a chart, say SMH, again, entered this yesterday, market pulled back today. Market was down a lot today, actually. You can see if I pull up the overall market, QQQ, SPY, IWM, down, a couple percent on the day. So it was a very red day. SMH followed. But prior to entering, you want to have a trade plan. So I always start, when I look at a chart, by identifying a level of support, a clear level of support on the chart, whether it is a moving average or a previous low. Like on SMH, you can see the low formed here at 237.32. Then I'm gonna look at where we're currently trading. SMH yesterday was trading up around $247 roughly. And I'm gonna look and I'm gonna calculate that margin from where price is currently trading, if I was to enter right now, to that support level. All right, and in this case, it's that low formed on the 4-hour time frame. Just say it was yesterday, we're around 240, 246, okay, roughly. I'm gonna drag this down here, and you can see that that support level of 237.32 is about 3.84% below where we're currently trading. So I know that if this trade goes against me, I'm not gonna even get into the setup and the idea behind the trade. I'm just saying that if this trade goes against me, this is how much I'm willing to lose. All right, this is my max adverse excursion, the most I'm willing to risk on one trade. This is how much money that I will be down, and I will actually be cutting and getting rid of this trade and losing that money. So you wanna make sure that you're comfortable according to your account size, right? How much you're gonna be down, you wanna make sure you're comfortable with that number. And that is also how you're gonna calculate your risk to reward for a trade. So when I look at SMH, if I entered right now, as in yesterday, okay, right around 246, if I'm wrong today, the market pulls back as it did, what will I be down if we hit or touch upon and begin to break below that support level? All right, at 237.32. Now, I will note that the market did pull back today. We are still above support. So I did not cut this trade. I'm still holding it. But when I was looking at my P&L today, I wasn't surprised because I knew exactly how much I was going to be down if this scenario was to play out, which it did. So you're going to use this concept to find your risk to reward, okay? If I enter now and this stock pulled back for whatever reason, tomorrow, how much am I going to be down on this trade? Say you're risking $1,000 and then your upside is $3,000. Is that risk to reward worth it? All right, am I gonna take that trade based on that risk to reward? Now, this all boils back down to removing the emotion out of a trade, because if you know your outcome, what is there to worry about? You are trading with money that you're not afraid to lose. You know exactly how much money you're gonna lose at that point that you're wrong. So sit back, get your phone, throw it out the window, don't look at it, right? Some people check their phone every 5 minutes all day. set your alerts, walk away, and enjoy your day, okay? Because you know what's gonna happen if you're wrong. You've got your plan laid out, and there's nothing to worry about. There's no emotion involved. If I cannot look at a chart and know right away exactly how much I'm gonna be down if I'm wrong, then that's not a setup that I'm gonna take. That's not a trade that I'm gonna take. So this same concept applies to when you're gonna go to take profit. So similarly to how you're gonna look for a support level to figure out how much you're gonna be down when you're wrong and your risk to reward based on that number when you throw the option into your option calculator. And I don't wanna get off topic too much here, but you can go to the Analyze tab, Thinkorswim Analyze tab. I know TOS has this, other platforms may or may not, and it's gonna let you calculate what your contracts are gonna be up or down based on where you are on the chart. If SMH pulled back to 237.19 today, I can punch in 237.19 and I can see the percentage and the dollar value that I will be down on any given contract that I choose, and according to my portfolio size, how many contracts I have. Again, that is the Analyze tab, and I break this all down inside my masterclass. First link is in the description. I break down how to go over this, how to set up your trade plan, how to figure out your upside, your downside, calculating risk to reward, all that. But like I said, now if I'm trying to calculate my upside, okay, how much am I trying to make on this trade? I want to know this before I enter. We're gonna have our trade plan laid out prior to entering. We're gonna know how much we're willing to lose on this trade, how much we're risking, how much we're gonna be down when we are wrong, and then we're gonna also know how much we are gonna make when we're right. And I'm either gonna use a moving average, okay, or a resistance level within the chart. If the candles are trading under a moving average, 15-day SMA, 50-day SMA, 180-day SMA, that means that moving average is gonna act as a resistance level. And from where price is currently trading to that resistance level, that is gonna be the margin for profit that you're working with. Say today, just as an example, we're gonna enter today and we're looking to play the move back up to the 15-day EMA. So we're wrong if we drop below 237.19, because that is a support level formed on the 4-hour chart. When we are right, how much are we gonna be up? And you're gonna calculate that by saying, hey, okay, 15-day SMA is sitting right at 243.37. How much are these contracts gonna be up once price moves back up to that level? That is my upside. That's how much I'm looking to make. Okay, I'm looking to risk this. I'm looking to make this. Is that risk reward worth taking the trade? If it is, now I have my plan laid out. Now I know what's gonna happen, what I'm gonna do, how I'm gonna manage the trade, and then there is no emotion involved. I don't know why there would be, because you already have a plan. You know you're willing to lose everything you're trading with, so who cares if you're wrong, right? You know how much you're gonna be down, because you still need to be aware of that, okay? Because say you have an 80% win rate, you need to know what risk to reward you can actually take based off that. This is based on the formula that I use to set up, manage, and execute my trades, all taught in the masterclass. I don't have time to break that down in this video, but generally, based on your win rate, you're gonna be able to figure out what is the max risk to reward that you could take. Like, you'll know right away, hey, can I take a 1-to-1? Can I risk $1,000 to make $1,000 based on my strike rate? And taking all this into consideration, it comes down to a formula where there is no emotion involved. And something I wanted to talk about too, because I know many of you watching this probably have smaller accounts. Maybe you have $500, $1,000, $2,000 to trade with. Realize that you're inherently gonna have to risk more if you wanna make more, but you can't, because you're putting your account at risk. Right, you're gonna be too overexposed to the market and you're gonna blow up your account. Okay, so it's very hard to grow an account. It's very hard to scale a small account. That is why this is, equally as important, if not more important, for you with $2,000 versus the guy with $100,000. Because taking one trade, say an option contract is worth $1,000. That's 50% of your account if you're trading with a $2,000 account. Now the guy with $100,000 is gonna buy that one contract worth $1,000. All right, that's only 1% of his account. You're both gonna be making the same amount if you're right. You're both gonna be losing the same amount if you're wrong. But for that guy with the $100,000 account, he's not going to be phased, all right, if he loses that $1,000, because he's got that capital behind him to be able to make that back. But when you've only got $2,000 in your account and you lose $1,000, now you're down 50% on your account. If the 100K guy was down 50% on his account, he would be down $50,000. So I think hopefully that puts it into perspective of like how important this is and how important position sizing is, and knowing that you can't take certain risks that others would because of the size of your account, because you'll be overexposed to the market and you're at risk of blowing up your entire account. So just to recap, never enter a trade if you do not know and cannot figure out exactly how much you will be down if you're wrong. And also, do not enter a trade if you have no idea how much you're even going to be able to make on that trade. So don't enter a trade if you don't know what the risk to reward is for that trade. Once you've taken enough trades, you're going to know what your strike rate is, and you're going to be able to use that number to help you calculate your risk to reward. So a little bit of working backwards while at the same time working forwards. Just you need to be able to collect that data, and you need to be able to take trades to figure out what your, again, strike rate is, your win rate, however you want to put it. And then you use that to figure out what your risk to reward, or what that risk to reward is going to look like. What would be a good trade based off that risk to reward? Now, without that data, yes, it's going to be hard, but just do this. Do not enter a trade with more than 5% of your account. That is very conservative, and that is the 5% rule. Using 5% of your account on a single position makes it almost statistically impossible to blow up your entire account. Now that is going to give you the freedom or the ability to take enough trades to collect that data, so you can get, say, 100 trades or 10 trades, whatever, under your belt, to know if, you know, say, hey, every 10 trades I take, 6 of them are right, 7 of them are right, and then based off that, you're able to calculate that risk to reward. And yes, if you have a $2,000 account, using 5% of that $2,000 account, you're not going to be able to make much. Once you're able to have a not only solid understanding on how this all works, but be able to consistently develop a trade plan and execute these trades based off of moving average, crossover, technical indicator, or whatever strategy that you're trading, once all the pieces of the puzzle fall into place, well then go for it. You know, like push your account, go 10, 15, 20, 30%, because then you just adjust the numbers accordingly. But keep it under 5% when you're starting off. Like right now, I'm gonna be completely transparent. I will put more than 5% of my account on a trade because I know my expectancies. I know how much I can risk on a trade, all right? I know how much I'm trying to make. I know my risk to reward. When I'm looking at a trade, I know that risk to reward, that is going to be worth it for me. Not just worth it, like I know that, hey, if this risk to reward, if this is a 1-to-1, I'm not gonna wanna take this, right? Because my expectancies say 80%. This is some higher level thinking when it comes to trading, and it's really hard to break this down without hours to do it. And that's why I created the masterclass, which I will put a link, it'll be the first link in the description, to the mentorship group, and within the mentorship group you'll get access to this masterclass, and you'll also get access to copy my exact trades. What I'd recommend also doing is go back and watch from episode 1 to this current episode, because as we go, these episodes are going to get more advanced. So the basics are back toward episode 1, and then we're going to start diving into deeper concepts as we go along here. Again, all of this boils down to removing emotion out of the picture, and a couple tips along the way that I just gave you. So I hope you did enjoy. I hope this cuts together well. It was just one of those days. I could not record for the life of me. This was probably our 6th or 7th attempt. Smash that like button. Subscribe. Weekly episodes. We post a new episode every Wednesday at 3 p.m. Eastern Standard Time, so make sure to turn on those post notifications. And with that said, I will see you all in next week's episode. Later. And you literally... Oh, it took 7 hours.